Cool. So today is Wednesday, January 14th, 2026. I believe this is day 7 um, with the 50K Express account. So pretty much what I'm going to be doing here is just going over uh, the price delivery for the trading day and solely nothing else. Um, you'll see what it is that I am studying, and hopefully you can use this stuff for your studies. So I'm only really paying attention to what price is doing after midnight. That is again when the algorithm kicks in. I trade algorithmically, um, utilizing ICT concepts. So there is a certain way that I view the marketplace that I guess some people just don't. Moral of the story, we're gonna go over the price delivery um, for the day, which it was clearly a sell
The
model
market is open.
or sell day. Sorry, I almost forgot it's 6 p.m. So the market is now open and trading again, but not necessarily going over anything related to what Asia is doing. I'm just here to solely talk about the price for the trading day before we closed off at 5 p.m. So I'm going to zoom in into this 15-minute chart for NQ, and I also have YM and ES as well. The indexes from time to time will be in sync and correlate with each other. And you can use that a lot of the times to give you strong confluences into a bias. Um, SMT divergence, things of that sort. Uh, when that structure lines up, I like to use it as a confluence with seeing the same emulated structure being pasted from NQ into YM and ES, and then that pretty much allows me to trust the idea of us, continuing to see shorts or continuing to see longs, or if there's any consolidation or odd movements in relations to the other indexes. There's a story to tell when it comes to that. It's like reading a book. So when you're reading price, it gives you footnotes, things of that sort, that you could just pay attention to that help you possibly not lose money, um, and possibly make money. So I'm gonna zoom in to NQ. Another thing that I would do is I guess just cycle through the time frames, just so you can see what everything is looking like. And I'm gonna go ahead and hide these things. So we can see how price has been delivering on the 4 hour. I go up to the day, so you can see what price is looking like on the day. Very choppy, very nasty. Um, Cycle to the weekly. Honestly, not really utilizing um, what's being done here off of the higher time frames, because again, I'm day trading, not swinging. So these price models they feel more so like long term, well, short term to long term scalping in a sense. But again, it's in sync with the bias of the day. So these scalps that you will potentially be taking will be great ways to have a resting position for continuation of new expected shorts, if that's what you're expecting for the market to do, to continue to keep going down until it hits wherever it's targeted. PD array is you're looking for the market to pretty much target PD arrays, whatever those PD arrays might be sitting at within the market, previous day lows, highs. In this case, since we're bearish, you're pretty much looking at everything on the sell side of the curve uh, to be targeted, rated, of course, manipulation in a sense to see price drive lower in order to go higher. So that's how you formulate a lot of your trade ideas using these concepts. So now I'll go down to the 1 hour. I don't know if I showed the 1 hour and lower, but as you see, the lower the time frame you go to, the more inside of the structure that you can see. the better and crystal clear that it looks, especially on NQ. Um, the price delivery was a lot cleaner, even though it did chop and screw. You can definitely tell what the draw is, and when you go down on these lower time frames, you can start to dial in and see everything that you need to see to be able to, take your trade. So I go down to the 5 minute as well, and I'm going to cycle down to these time frames as I'm showing the markups of what it was that I was seeing to take the trade. But though I got stopped out, I think I was about like 20 points in a profit and it ended up getting stopped out. Traded the break of this low, I believe, at 932, and market fell and then came back up, stopped me out, and then dropped for whatever amount of points that it went for. I didn't get the chance to really look too much at it after my initial targets had got hit. So I cannot remember exactly where it was that I had got in. But if you watch the recording, the video that I had posted, you can see exactly where I had got in for the price delivery. I just wasn't, lucky enough to have the whole position in my favor, but at least I got to get in it. So I think I was trading the 930 open or something like this, and I think I traded this break here at 930 once price broke under this low, taking it down underneath this array here. And this was pretty much the low of the day. That price was just having some low hanging fruit below here. So I was looking for a price to pretty much attack the low of the day, which at one point in time it was. Now it no longer isn't, because our new price data low is all the way down here at 1:38 p.m. So all I'm going to do is just pretty much analyze the price delivery at 9:30, everything that it's done after 9:30, and then how the trade that I was looking for pretty much played itself out after I got stopped out. So looking at price, we can pretty much see that after midnight, um, London pretty much started the the trend or the formation of the bear curve. We see how after midnight, when we open in Asia, straight chop and cluster, and then we have around that 5 o'clock mark, the market started to make its distribution to the downside, taking out Tuesday's PD array here. So we had that being done within London session. While we were sitting inside of this range here, the market finally had a willingness to break out of this consolidation here and then redistribute price to the downside. So you'll see areas within the marketplace where market orders are just simply accumulating, and then you'll have redistribution of those accumulated orders, that next leg of price that you're expecting. So it's always accumulation, manipulation, and then distribution. AMD, I believe. So the market went ahead and attacked Tuesday's low. So we trade through and back to Tuesday's low. So price, we know for a fact that we're sitting within a bearish channel due to the simple fact that we traded underneath Tuesday's low and price is held underneath Tuesday's low. So just being able to analyze and look at this from a higher time frame, you can see exactly how that leg of structure is holding up when price went ahead and traded underneath Tuesday's low. So as price is reacting off of this key level here, of course we're in closing an imbalance that we had from Monday. That balance has been closed and filled, and now price is continuing to show us more distribution going into Monday's low. So not only did Wednesday take out Tuesday's low, but we took out Monday's low as well. So These key levels definitely hold importance within the marketplace, especially when it comes to understanding where your draws are at in the market intraday. So go back to the 30 minute. You see how that leg of price looks exactly the same. Going back to the 15 minute, you see how everything is starting to clear itself up, and you can understand why I was looking for shorts. And you can see how clean the structure looks when you look at it in this sense for the shorts. So at 9:30, it was very simple. We'll see how price had this fair value gap that it left back here. Um, Consequent encroachment, CE, 50% of that fair value gap was respected. Then we have price coming right back up one last time, trading up into here. So price is coming up into our order block up here. Um, Wicking up into there, we had about three touches. So one touch, two touch, three touch, um, and closure below. So price is respecting this sponsorship that we have identified within this order block. And then from there, you're pretty much looking for a breakdown of the structure. So I'm trying to make this very, very simple. It's not hard to understand market structure when you're in sync with the delivery. After we had that displacement at 9:30, we see how price pretty much left behind another fair value gap in between this down close candles low and this what was, the up close candles high before it ended up flipping over. I'll make this green. So price traded into this 15-minute FEG. And then we have our 15-minute OB. That is being used bearishly. So cool. Sorry. So prices traded up into that. Um, then after we had that break, we see our displacement now. So in terms of market structure, what I pretty much want you to think of is price making a low, the market finally breaking underneath that structured low, returning back into the range, but trading into that fair value gap. And now you're expecting that a lower portion of the range is going to be created in here, giving us that new next and expected price leg for us to keep toppling these lows over and over again as we repeatedly keep going down. So that's how we're expecting for the leg to form after we have our confirmation for entry. So I got in literally somewhere around here. I don't even know what the hell I did with that blue level, but I think I got in. I got to scale down to the 5 minutes so I can see exactly where I got in because I'm trying to watch the chart, well, the video as well, and then look at this. I know I got in around this break here, and I was trying to trade under this break to take price even lower into the PD array here from Monday's low, but it whipsawed on me and pretty much stopped me out. If you watch the video of it live, you could pretty much see how I was trading um, in flow with the orders, very rapid and quick responsive movement to the downside, which is what I like to see to hold my trades. But unfortunately, I wasn't able to get a complete feel of my trade because it pulled back on me and then dropped again. And here we are at data lows all the way down here when my entry was all the way up here. So now I'm going to scale down to the 5 minute. Let me change this back. And you can see it a lot more clearly now. So we had that 930 pretty much melting the market all the way down here, and I believe I traded in the 930 candlestick. I can't really necessarily remember since it's so damn long ago now. I just have to go back and watch the video, but I'll just speak about how you could have got in sync um, with this. Uh, I know to most people this shit looks like chop, but trust me, it's really not. So we had the market pretty much make that move down, create this low, trade up high into the order block, and then price fell short again. So I was already in the trade. Unfortunately, since I wasn't able to hold, it pulled back and it started falling again and getting back into that ebb and flow. So you can see how the market is making the structured leg, creating these fair value gaps as well, and the market is respecting them, um, giving those possible turtle soup scenarios as well with the highs, because we're expecting that structure is just going to continue to break itself down every time it topples a lower high. So, if we're staying in line with the bearish sink, you want to see the market pretty much trade lower, uh, but of course come up. In order to trade lower, we got to go higher. So, market is trading into this 3 minute imbalance. We come back up here around 10:15, creating a lower high again, and then from there we fall short again. After the market pulls itself away, you can see the rejection. Um, you can see the market coming into the up close of this order block here, respecting it, and then we fall short again. Um, and it just keeps repeating that same pattern over and over again, giving us those fair value gaps. This is probably like the most perfect price delivery I've seen yet, just off of just the the market structure, just respecting these fair value gaps every time it comes up into it. But we trade into that Monday's PD array here, targeting that sell side, and then from there the market sat underneath here for a bit before turning back up into the range. Because remember, this is all in hindsight, so you're not going to see any of this delivery. All you're literally going to see is the market uh, trading at 9:30, making its way up, retracing after the market opening, coming up, and then selling down and taking out Monday's PD array, and then returning all the way back up. That is all you're going to see. So you don't have clairvoyance. You're not going to be able to predict every single time where the market is going to be derived to go to, because it's going to do whatever the fuck it wants to do. So there was plenty of opportunities to get in sync with this. I was pretty much just looking for this type of ideal here to play out. About 30-point stop. That's typically what I like to risk once I see my model or my approach, and then looking to pretty much take it down all the way down to DOL, the draw liquidity. It's bearish, so every time we make a structural leg up, price breaks itself back down and give us a window of opportunity. I'm looking to short that opportunity and take it down. So if I was able to get in where I got in and actually hold it, this could have been almost a 1 to 9 risk to reward, risking 30 points to pretty much grab about 269 points with me trading one mini contract on NQ and aiming for, well, can't really necessarily aim for those amount of points, because again, I didn't know it was going to go down that low, but I know it's going lower to PD arrays and whatever DOLs are on the left side of the chart. You could take those lows and things of that sort and attach them to your chart, because you're anticipating if the market is going to go lower, it's going to draw. It's going to grab those those lower draws of liquidity on making its way down, creating the new price structure leg as well. So not only is the market creating new price, but it's returning to old price ranges as well. Um, but just looking at this trade idea, it could have been a 5K trading day if I was actually able to hold my position from where I got in, because it was pretty nice. Um, Looking at it while it was happening, but now looking at it intraday, you can see it's just a lot of whipsawing, choppiness, and unfortunately, I wasn't able to swing my position. I think I was up about 20 to 30 points, somewhere within that range. I think the P&L high was probably like somewhere around like $600 or some change maybe. But could have took that position, just ate off the market trading into the low of the day, and ate off of that, and it maybe got back in later, once the market set itself up again to take another short. But really trying to limit myself to one or two trades. Once I see my model pretty much appear on the chart, I'm not really necessarily trying to take any other trade but that trade. So if I see the trade, I try to make my first trade my best trade. And if I take any more trades after that, they have to be damn near pitch perfect, because no one wants to give back any of their money, to the marketplace. So that was pretty much my whole ordeal um, with NQ. Again, I don't think I really necessarily have to go over it here as well, but you can definitely take the things that were done here with NQ, the price levels, the midnight openings. I just do one really quickly um, for YM and ES. Just so you can see exactly what I mean. So it looks a lot nastier on ES and NQ. Well, ES and YM. Looking at price on both of these 15-minute charts here, you can see how the delivery on ES and the structure with YM is very similar in a sense. Though they don't look identical, the way that the legs have set themselves up look very similar. Uh, but the structure, I would say, in a sense, is a lot cleaner on NQ than it was on ES. If I had to rank it from best or greatest to least, I would definitely say NQ took the spot, followed by ES and then YM. Uh, but you will have times where everything is pretty much in sync, and you can use that in syncness to get a gist of where the market is pretty much trying to go. So I'm gonna just mark some things up. Really, I just want to pay more attention to what happened with ES. So with ES, you can see how the same way how we took out our Tuesday low back here, we did that as well with ES happening all the way back here. So again, that's that range here with NQ. That same range that we are seeing here with ES. So the market is again trading within that bearish leg of price. We are underneath Tuesday's low. Very simple. We know that we're within bearish territory, so I'm expecting another bearish leg to pretty much be formed here, which does eventually happen at 9:30. So now I'm going to identify that 9:30 opening here, which happens here. And I'm going to reduce this, make it a dotted line, and then we're going to title this 9:30. So if I do see any SMT diversions or anything of that sort, I will mark it. If not, just leave it as simple as it is. It's really no need to overcomplicate it. But that 9:30 open happens here. The market, of course, trades up the same way how we did here with NQ. We trade up, and then from there, the market has that three drive high where we have the failed high, failed high, failed high. ICT calls it a three drive high. That pattern is pretty much one of his smart money concepts, I believe, for like retail trading. Um, I can't really necessarily remember exactly what the utilization of that was, but I believe that is one of his retail trap patterns that he teaches in his 2016 mentorship. If you guys have watched that, so again, we had that break here at one point in time. This right here was the low of the day, intraday. So the market ended up trading into its low of the day the same way how we traded into our low of the day at 7 o'clock here. We traded into that same low here at 7 o'clock. So price delivered to the downside at 9:30, rallying underneath the low of Wednesday, and then pricing our new data low for Wednesday all the way down here at 11:45, and we get that same low um, all the way down here at 13. I'm sorry, not 13:30, but 1:30 in the afternoon. So where the low formed here and where it formed here is a lot different. You can see on ES how we had a fail swing, pretty much going lower, where the market made a low and a lower low, and then we have on ES where we have that low and a lower low, but it shows that same formation of that failed price leg being emulated here if you really think about it. Um, so going even deeper into ES, I'm just trying to emulate both of the charts on the side just so you can see how the delivery was, um, with the structure being similar in a sense. I'm gonna drop us down to the 3 minute because it did look really, really nasty. But our up close move down, we see that displacement, not really similar to NQ in a sense, but is similar. We trade into the order block here, consequent encroachment. We also have the market pretty much turtle souping those highs here. So as nasty as it seems, none of these trades here are forced. They're all within a scenario of how price always delivers itself over and over again. Um, So we traded to that fair value gap on the 3 minute. We turtle soup these highs here at 9:48, all within the consequent encroachment of this bigger order block here. The market respects it. It gives us our shorting opportunity to literally take the same type of trade that was taken on NQ, happening right here in this leg of structure, attacking those 10 o'clock lows. So you can see the gist of how your trade idea pretty much could have played out here, and pretty much taken price lower, the same way how we did on NQ. So keep in mind, the price and things of that sort is going to vary because trading on ES um, is going to be $50 per point. So what you're doing here is going to be a lot heavier than what you're doing on NQ, with that being $20 per point. So you're getting a $30 increase. So you just have to make sure that your risk management is on point with what it is that you're allotted to risk on your account. But very simple. Same approach with NQ, the same approach that you have with ES, and just lining up that structure with the delivery of what you're expecting price to do, which we're expecting to go to the downside. So any of your confluences that you see with price, you'll understand exactly where it is that we're at in terms of price, and you're just looking for that delivery to the downside. So to me, I like the way that my trade setup pretty much formed on NQ. The same trade setup formed on ES, though it might be a little bit unsimilar in a sense, but you definitely can see it once your eyes are fairly trained enough. Um, I ain't even gonna go over YM. I'll let that be. Did the chart markups disappear once I... Can I get it back? There we go. So I just want YM and ES to be shown, but I don't want it to... delete all of the markups. Honestly, I just want to remove this chart, but if I remove it, it's gonna take the whole damn thing away. Yeah, it shouldn't do that though, because once I have it selected, it should just remove YM because that's the unselected chart. But it for some reason wants to save it. So what I'm gonna do is just return the chart data back and just move it out of the way and keep both of the 3 minute charts, just so you can see the correlation in the market structure here. The same way how we had that fair value gap here, after we formed displacement at 939. You see how that same move was formed here at 1027. So the 939 move is like all the way back here, where you had the market break off. That's that same order block. Um, Market came down, created a low. You see how the market at where's that 930 right here, 939 break off, then retrace, created that same high. We turn into that fair value gap, turtle souping, turtle soup, and then falling and dropping lower, falling and dropping lower, fair value gap, fair value gap, trade into the 10 o'clock lows, trade into the 10 o'clock lows. So you literally see how the structure is being emulated on ES, and that same structure is being followed on NQ. So that's literally what I mean by being in sync with the marketplace. Is once you understand where the market is derived to deliver itself to, all you're pretty much waiting for is those confirmations within your trade to be hit, and then you're looking for the market to follow suit. And same thing with NQ, you're looking for it to follow suit. So that's how I use um, these indexes to get a gist of what it is that I'm trying to do with my draws on liquidity. This is probably one of the biggest confluences that I use when I'm trading. So hopefully this helps someone. It's a very simple approach, not hard to do, very easy. It's honestly just chart correlation between two asset classes that move very similarly to each other. Once you study these things enough, you see how YMES and NQ at times will be in sync, and at times they will be out of sync. So it creates on risk and off risk scenarios where you're probably more likely to be risky when the market is in sync versus when it's not. So that's all that I have for you guys today. I hope you enjoyed this little 30-minute video, trying to really narrow down how long it is that I'm sitting here and teaching these models that I'm showcasing to you guys, because I do understand the longer the video is, the less likely I am to hold your attention span. So that's it for the charts. Now we can go into the expresses. So again, I haven't taken any trades in these expresses yet since the 9th and the 13th, which is cool with me. Eventually I'll be able to catch a very, very clean setup. Did trade the high risk account today. So after taking our loss on the 12th, after having like a fucking 10-day hot streak, and I'm accounting for that from the evals, 4-day passing, and then from 4-day passing, those evals, another 4 days of profitability, and then we finally lost on the 9th day, ending that streak of 8 days of straight profitability. Even though I broke even on 3 other trades, they were some pretty good trades if I did not get stopped out. On the 12th, we ended up taking a loss, which was cool. On the 13th, stayed level-headed, took the same trade, traded CPI, caught the long, and then today was looking for shorts. Probably was up like 600-700 on the P&L. It ended up breaking even and taking 154 for the profit, which is cool. Not looking to try to force trades. If my model is there, it's there. I take it. If it's not, I'll leave it alone. So that's pretty much what I'm doing with max allocation with Top Step. Definitely aiming to get more with different firms. So I'll definitely be doing some research into that. So this account solely but surely only trades setups. None of these trades are forced. They're all setups. I'm not randomly getting into the marketplace. And then the other four expresses, again, as I said before, they are meant to pay myself forever. They're meant to make money. Um, and that's pretty much the whole gist and goal of leveraging these accounts, is to continue to keep paying yourself. You don't need to make 5, 6, 7, 8K in a trade just to be considered a good trader. You have to be able to keep making money consistently to be able to be a good trader. So I've been trading with Top Step for over 6 months um, of profitability, over 20K in payouts, and I'm still funded and still making money going into the next year. So that's all I have for you guys for this video. Stay tuned for the next. Bye bye.